Imagine a life where credit cards are no longer a source of financial stress, but instead, a valuable tool that helps you manage your expenses wisely. In this video, we'll delve into the world of credit cards, exploring how they work, their benefits, and potential pitfalls. We will then reveal effective strategies for paying off credit card balances, breaking free from the debt cycle, and using credit cards responsibly. Join us as we dive into insights from The Debt Escape Plan by Beverly Harzog and empower ourselves with the knowledge to navigate credit cards wisely. Credit cards have become an integral part of our financial lives, offering convenience and rewards for our purchases. But what exactly are credit cards, and how do they work? A credit card is a financial product that allows you to borrow money from a lender, typically a bank, up to a certain credit limit. You can use the card to make purchases, and the amount spent is considered as a loan from the issuer. If you pay off the balance in full each month, you won't incur any interest charges. However, if you carry a balance, interest will accrue, adding to the overall debt. It's crucial to understand the benefits and drawbacks of using credit cards. On the one hand, they offer rewards, such as cashback, points, or travel miles, which can be enticing. On the other hand, the ease of swiping a credit card can lead to impulsive spending and accumulating debt if not managed responsibly. To navigate credit cards wisely, it's essential to familiarize yourself with common credit card terms, like APR, annual percentage rate, grace period, and minimum payment. Being informed about these terms will help you make better decisions when using credit cards for various purchases. One of the significant challenges associated with credit cards is the debt cycle. Many individuals find themselves trapped in a revolving cycle of credit card debt, making minimum payments but never fully paying off their balances. The debt cycle is perpetuated by high interest rates, often exceeding 20% or more, which compound the debt over time. To break free from the debt cycle, it's crucial to develop a solid debt repayment plan. Start by assessing your current credit card debt, including balances and interest rates. Organize your debts from highest interest rate to lowest, or consider using the debt snowball method, which prioritizes paying off the smallest balances first. Creating a debt repayment plan is key to tackling credit card debt effectively. Begin by setting a realistic goal for paying off your credit card balances. Determine how much you can allocate toward debt repayment each month while still meeting essential expenses. This may involve making adjustments to your budget and cutting back on non-essential spending. One effective strategy is the debt snowball method. List your credit card debts from smallest to largest balance and focus on paying off the smallest one first while making minimum payments on the others. Once the smallest debt is paid off, use the freed up funds to attack the next smallest balance, and so on. This approach provides a sense of accomplishment as you pay off debts one by one, motivating you to continue the journey toward debt freedom. Alternatively, consider the debt avalanche method, which prioritizes paying off the debt with the highest interest rate first. This method can potentially save you more money on interest in the long run, but it may take longer to see tangible results compared to the debt snowball. Creating a budget is a vital component of your debt repayment plan. A budget helps you understand where your money is going, identify areas where you can cut back on spending, and allocate more funds toward debt repayment. Start by tracking your expenses for a month to gain a clear picture of your spending habits. Categorize your expenses into fixed costs, such as rent or mortgage and utilities, and variable expenses, such as groceries, entertainment, and dining out. Dedicate a portion of your budget specifically for credit card debt repayment. By making debt repayment a priority, you ensure that you're making progress toward your goal and not overspending on discretionary items. If you're struggling to keep up with credit card payments, don't hesitate to reach out to your credit card companies for potential solutions. Many issuers are willing to work with you to find a manageable repayment plan, especially if you're experiencing temporary financial difficulties. Consider negotiating with credit card companies to lower your interest rates or set up a payment plan that suits your financial situation. Be prepared to explain your circumstances and demonstrate your commitment to repaying the debt. Keep in mind that negotiating with credit card companies can be more effective if you have a good payment history and can show that you're actively taking steps to improve your financial situation. To navigate credit cards wisely, it's essential to avoid common pitfalls that can lead to excessive debt. 1. Common mistake is making only the minimum payment on your credit card balances. By paying only the minimum, you'll take longer to pay off your debts and end up paying more in interest over time. Additionally, be cautious of high-interest credit card offers, such as store credit cards with attractive sign-up bonuses. These cards often come with higher interest rates, which can quickly accumulate if not paid off promptly. Another potential pitfall is using credit cards to finance large purchases, such as vacations or expensive gadgets. If you can't afford to pay off the balance quickly, you'll end up paying much more in interest, making these purchases far more expensive in the long run. If you find yourself struggling to pay off credit card debt, it's essential to explore alternative options to manage your finances effectively. One option is a personal loan, which typically offers a lower interest rate than credit cards. Using a personal loan to consolidate high-interest credit card debt can make it more manageable and may save you money on interest. Another alternative is a balance transfer credit card, which allows you to transfer your existing credit card debt to a new card with a low or 0% introductory APR. This can give you a temporary break from high-interest charges, allowing you to focus on paying off the debt more effectively. However, it's crucial to be cautious with balance transfers and personal loans. Ensure that you understand the terms and fees associated with these options and have a clear plan for repayment. Navigating credit cards wisely is essential for maintaining financial health and avoiding unnecessary debt. By understanding credit cards, creating a debt repayment plan, budgeting effectively, and building healthy credit habits, you can use credit cards responsibly and break free from the debt cycle. As you implement the insights from The Debt Escape Plan by Beverly Harzog, remember that financial freedom is achievable with dedication and discipline. Stay committed to your debt repayment goals, stay informed about your finances, and make wise financial decisions. Thank you for joining us in this exploration of credit cards and debt management. We hope that this video has provided you with valuable knowledge and actionable tips. If you found this content helpful, don't forget to like and subscribe to our channel for more educational videos on personal finance. The information provided in this video is for educational purposes only and should not be considered as financial advice. Please consult with a qualified financial advisor or credit counselor before making any significant financial decisions. Your financial well-being is your responsibility, and informed decisions are crucial to achieving your financial goals. Stay informed, stay savvy, and take control of your financial future. Happy budgeting!